Imagine waking up and knowing that your money is working for you, even while you sleep. Instead of relying on a paycheck, you hear the sound of dividends hitting your account, fueling your financial freedom. What if I told you that you could earn $2,900 per month in passive income without selling a single stock? This isn't just a dream, it's completely possible, and today I'm going to show you exactly how to achieve it. We'll break down the best dividend strategies, the investment amounts required, and how to create a steady, predictable cash flow from the stock market. Whether you're planning for early retirement or just looking for a way to generate extra income, this is a must-watch. This is The Alternative Investor. Let's get into it. Welcome back to The Alternative Investor, where we break down investing strategies, financial markets, and passive income ideas that Wall Street doesn't want you to know. Want to start investing? Get a free stock on Robinhood using my link in the description below. It's a great way to support the channel. If you love deep dive stock analysis, market insights, and financial freedom strategies, hit that like button and subscribe to stay ahead of the curve. All right, let's talk about how to live off dividends. The first step in making dividends your main source of income is understanding how much you actually need to invest. Most Americans spend an average of $67,000 per year, but everyone's financial situation is different. Depending on your lifestyle, location, and expenses, this number could be much lower or much higher. For this example, let's assume you want to generate $2,900 per month, which adds up to $35,000 per year in passive income. The key question is, how much capital do you need to invest to hit that goal? Understanding dividend yields. The amount of money you need to invest depends on the dividend yield of your portfolio. Dividend yield is calculated as the annual dividend payment divided by the stock price. Here's how different dividend yields affect the amount you need to invest. If your portfolio has an average dividend yield of 12.52%, XYLD, you'd need to invest approximately $279,000 to generate $35,000 annually. If your portfolio yields 8.09%, EWZ, you'd need to invest around $433,000. If you invest in REITs with an average yield of 10.8%, you'd need about $320,000. For Dividend Aristocrats, which offer a more stable but lower 6.83% yield, you'd need approximately $512,000 invested. Higher yields mean less upfront investment, but they often come with higher risk and volatility. Choosing the right mix is key to maintaining a stable passive income stream. Now let's break down 3 of the best strategies to achieve this goal. One of the fastest ways to generate high-yield dividends is through covered call ETFs. What are covered call ETFs? Covered call ETFs are specialized funds that generate income from both dividends and options premiums. These ETFs invest in a basket of stocks and then sell call options on those stocks to collect extra income. When the ETF sells call options, it collects premium payments, which are then distributed to shareholders as dividends. This strategy allows for higher than average dividend payouts, often above 10%. Best covered call ETFs for passive income. Some of the most well-known covered call ETFs include Global XS&P 500 Covered Call ETF, XYLD, yield 12.52%, iShares MSCI Brazil ETF, EWZ, yield 8.09%. How much do you need to invest? If you want to generate $2,900 per month using covered call ETFs, you'd need to invest around $279,000 with XYLD or $433,000 with EWZ. While covered call ETFs can provide high and consistent income, they also carry risks. If the stock market drops or option premiums decline, dividends may fluctuate. However, for those seeking strong cash flow, they can be a valuable addition to a dividend portfolio. Another great way to generate passive income is through high-yield real estate investment trusts, or REITs. REITs are companies that own and manage income-generating real estate such as apartment complexes, office buildings, and shopping malls. Instead of purchasing properties directly, investors can buy shares in REITs and collect rental income in the form of dividends. Some of the top high-yield REITs include Two Harbors Investment Corp. With a 12.99% yield, and Orchid Island Capital, with a 17.6% yield. To generate $2,900 per month from REITs, you'd need to invest around $320,000 at a 10.8% yield. This strategy allows you to earn real estate income without actually owning properties, dealing with tenants, or managing repairs. However, REITs are sensitive to interest rates and market fluctuations, so diversification is key. For those seeking lower risk and steady income growth, Dividend Aristocrats are an excellent choice. Dividend Aristocrats are stocks in the S&P 500 that have increased their dividend payouts for at least 25 consecutive years. Some of the top Dividend Aristocrats for passive income include 3M with a 6.8% yield, Leggett & Platt with a 7.2% yield, and Walgreens Boots Alliance with a 6.5% yield. To generate $2,900 per month, you'd need to invest around $512,000 at a 6.83% yield. While Dividend Aristocrats offer lower yields, they provide long-term stability and reliable dividend growth. Now I want to hear from you. Are you investing in high-yield ETFs, REITs, or Dividend Aristocrats? Let me know in the comments. Get your free Robinhood stock in the link below. This is The Alternative Investor. See you in the next video.